Hello, welcome to Business Incorporated live on Channels Television. It's another trading day right after the market rout of yesterday. Here's what's coming up in the next 55 minutes. Economists count the cost of hardship protests, estimated at $1.45 billion. And Kenyan vehicle manufacturer Mobius mall shutting down, issues notice of insolvency. Plus, oil prices climb more than $1 in fear of spreading Middle East conflict. And it's great to have you join us. I'm Ladi Williams. Let's get a check on the markets. First off, we see gold prices edging up today after comments from the Federal Reserve officials reinforce expectations of a bigger U.S. interest rate cut later this year. Investors just want to know, when is the Fed going to cut rates? But we're seeing gold already responding to that. $2,449. Now, a new level, and it's about $2,500 per ounce. That will be a new level if we hit that, 0.2% up. And we'll see spot gold, $2,408 per ounce. Spot silver, that's been on a downtrend for a while now, 0.45% down, $27. Wondering if this $27 level is going to hold going forward. And palladium, $827, about 0.17% up. And talking about tumbling, let's see, oil prices have climbed more than $1 today after the market rout yesterday, apparent the previous day's loss, and concerned that an escalating Middle East conflict could hit supplies. That's outweighed fears of a possible U.S. recession that could hurt demand in the world's biggest oil consumer. We see Brent crude futures again about $1.25 to $77.55 a barrel. Both benchmarks still below that $80 level. We see the U.S. grade that climbed $1.35, about 1.9% to $74.29 a barrel. We know both benchmarks fell around 1% against the backdrop of falling global stock markets. Oil side was limited by worry that Iranian retaliation for the assassination of Hamas leader in Tehran may lead to a wider war in the Middle East. And to other stories now, the Nigerian Upstream Petroleum Regulatory Commission says it is implementing the upstream asset divestment framework to guide the seamlessly non-destructive exit of divesting entities and promote sustainable operation for the acquiring parties. The Commission Chief Executive, Mr. Gbenga Komolafe, made this known at an energy conference in Lagos, also assured of its support for the Dangote refinery and all other refineries in the implementation. Mr. Komolafe also mentioned that it was working to ensure collaboration with industry regulators and stakeholders to attract businesses in the country's oil sector and divestment in the overriding national interest. The NUPRC boss expressed confidence that the Commission's effort to foster regulatory alignments in this respect would stimulate further activities for domestic energy security. And GCR Ratings has affirmed the national scale long-term and short-term issuer ratings AA+ and A1+ respectively to Dangote Industries Limited. According to GCR, the rating affirmed on the prospects of significant growth in earnings following the commencement of the operations at the new petrochemical refinery and robust earnings expectations from the other businesses. The rating agency decried the impact of the Naira devaluation on Dangote Industries' performance, but maintains a positive peer comparison consideration for the group underpinned by the importance of the refinery to the Nigerian economy. And as normalcy gradually returns to parts of Nigeria, economists have been counting the cost of the demonstrations and a partial halt of economic activities. The Chief Executive Officer, Financial Derivatives Company, Mr. Bismarck Ruwani, says the about 4-day disruption has cost the country about $1.45 billion. Take a listen.
It's about $581 million. If the entire economy is shut down for 1 day. For 2 days, it's about almost $1.16 billion. So that is the cost if you shut down the economy, but the economy was not totally shut down. It was shut down partially. So if you take an average for 4 days running, and let us say it's only 50% of the economy affected, you will find that it comes to about almost $1.45 billion. So that is the cost impact. But the reality is that the economy was not totally shut down. But what is happening is that some activities were stymied and some people were holding back others. But it's a very expensive exercise, both from a macroeconomic perspective, but also psychologically and sociologically. People are beginning to believe that, okay, can I go to work? I've not added the time of people staying in queues and the fact that when one sector shuts down, it affects the other. So the interrelationship and the linkages between one sector and the other are very expensive.
Well, a former chairman of Shonga Farms in Kwara State, Dr. Tope Daramala, believes that the possibility of more protests remains high as long as food supply is not sufficient. Dr. Daramala was a guest on Business Morning earlier, says that resources are shifting away from the agricultural sector, thereby discouraging players and investors. Take a listen.
We know that there's complete disconnection from what we call policies that we have in Nigeria in farming and actual way these policies have been implemented. There's a wide gap between what we thought of and what is on the ground. So for Nigeria, for example, in the last 10 years, the problem that we're having now has been building up. Is it the insecurity that we are talking about that has chased away people from the farm? Without security, nobody can go to farm. Okay, so if you have farms and you can't access those farms, if you have factories, you can't go in there for food processing. So how do we have foods on the table? Now, the other thing that has been that led to these broken policies is because if you see gradually, they have been shifting and sifting of key resources away from this critical sector, which is farming, up to other sectors of the economy. The manpower are living, youth are living the farms. Quite a lot of people are not doing what they're supposed to do. They are not secured. The sector is not giving hope to people, and it's not rewarding operators and participants. So why do you want to be there? We all know how the basic economics show us how the economics works. Once a sector can offer reward that is commensurate to the labor and input that we are putting there, you stay in there. But for the case of farming in Nigeria, it has not been so.
All right, let's look at matters now that impact FX inflows into Nigeria. We see the Nigerian National Petroleum Corporation Company Limited, NNPCL, announced that it has launched a new crude oil grade, Utakwate, into the international market. Well, Utakwate's current crude oil production is at 28,000 barrels per day, with potential to increase to about 50,000 barrels per day. Well, joining us to discuss this and other matters, we have Mr. Kalu Aja as a financial analyst joining me via Zoom. Great to have you on the show.
Hey, Larry, how you doing? Good morning.
Yeah, I'm really good. It's still afternoon here, but I know right there it's the wee hours. Thank you for waking up so early to do this with me. But let's start with the protests now. Estimated losses for the economy at about $1.4 billion. And I'm wondering, does the cost, is it outweighing the benefits, or is the expected benefit outweighing the cost? How are you seeing this?
Interesting question, Larry. I think the real cost of the protest is that the investors are not sure what's going to happen tomorrow with the policies, the bold policy that President Tinubu had started off with. I think that came out in pictures. So the fuel subsidies looks like it's back. Even the float naira, they're asking for it to come back to a fixed peg. That's the real cost, not the naira dollar cost that the economist, Mr. Rwanda has talked about, but the fact that these policies could be unwound, that would go back to a welfare state, that the broad capitalist reforms that we're driving towards are going to be paused to assuage the concerns of the folks that are out on the streets. If that happens, then of course that means that most of these FDIs that we're expecting, these plans that have been put on paper might not come to pass, that we're going to focus more on human development indexes, to spending money to make the youths and those that are quote unquote hungry happy, and not investing in long-term infrastructure. So that, I think, is the cost that we cannot phantom or quantify at the moment, but it's the real cost of what we're seeing happen in the street right now.
Right, and I keep asking this question. We've talked about multidimensional poverty. Seeing the level in Nigeria. So, do you think countries with such high poverty rate should actually indulge in protests?
I mean, it's everywhere. There are protests everywhere in the US, the UK. Everyone protests once the economy pinches, right? I think it's maybe the way we've done it. This protest per se that you see happening in Nigeria, it's not that widespread across Nigeria. It's not like the SAP riots. It's not been that lots of people out on the street. But it's been, it's taking into account the way the government went about to try to stop it, and it still happened. That's really the what I took away from it, that people still came out to say they are hungry. Even when the government has spoken to them through many ways to get people not to come on the street, it still happened. So, I mean, even in the US, the Communist Party of America protested in Philadelphia. I think that was last week. Big protest, well organized, they were all dressed in red. And they were protesting the same thing, they want to get stuff done. So we're in that time. Let's put it that way.
Now, I guess we're tagging 2024, the year of protests at this point, and I'm wondering what this will mean, for the global economy, because we're seeing protests almost in a lot of countries at this point. What do you think this is telling us about 2025?
Larry, the biggest protests in the world right now have been on the polling booths. Look at what happened in Italy, Austria, Switzerland, France. Those have been protests at the ballot boxes, where you've seen the quote-unquote parties that would not have won elections in the past now winning elections, right? So you've seen the far left winning majority seats in European Parliament and even in the French lower house. So those have been protests that have not been on the street, but have been very, very loud. Look at Germany, Europe's largest economy, how the ruling party is losing seats. So there's been protests going on. I think the status quo is in trouble. In Europe, only Italy was status quo that had remained in place, right? Look at Brazil, India, Bangladesh. Protests are happening. It might not be folks going out to the street, but they are voting. They are saying there's something going on with the world economy we don't like. Either we're getting poorer or the world's getting more expensive, but we don't like what we're seeing, want to try somebody else. That's what you're seeing happen in the world. If you move to 2025, of course, the big thing is going to be the American elections. Whoever wins that election sort of sets the tempo for how the world would operate. If the Democrats win, then we continue the Obama-led in the economy of, we're going to go green. There's a lot less fossil fuels, lots of cooperation around the world. If Trump wins, then we're going to go back to the more fossil fuels, very protectionist trade barriers and all that kind of stuff. So the U.S. election is going to be the real key pivot. Once Trump wins, it will cascade across Europe in more right-wing, more right-of-center parties winning. So that's what you're going to see. That's the main thing. And it's just in November, on less than 100 days away for that decision.
Right, and it's quite interesting. We did hear Trump, talk about the meltdown we saw in most markets, and I think he tagged it the Kamala drop or something like that. He's already saying that we're seeing that drop because of Kamala. Quite interesting. But let's look at the issues here. Now we're seeing the NNPCL trying to get more ramp up production of oil this time with this Tapate grade. So it's a new well, and definitely we're seeing it with the potential of about 50,000 barrels per day. So what do you make of this? And now we're having this export to Spain already. So do you think going forward we're going to get more production of oil?
I mean, the question has always been, where will supply come from for Dangote? There is no supply. That's the honest truth. First of all, this location of Dangote is away from the oil producing areas. That's number one. Even if it was in the oil producing areas, there's just no supply. We're at 1.6 million barrels per day, according to Mr. President. Even if we were at 2 million barrels per day, can we supply NNPC, supply the IOCs, and also supply Dangote at 450,000 barrels per day? It's going to be a hard stretch. I think we need to produce more so that he's able to get local crude oil to then refine and to make those petrochemicals, unless he's going to do the Indian model of importing the crude and then refining and then making a margin on that trade. But the point, lad, is that Dangote is now a strategic, too big to fail enterprise in Nigeria. So whatever the disagreement, whatever the issues, he cannot fail. That's a 15 billion investment that would drive and change the entire economy of Nigeria. So it should be priority number one. I'm not saying we take away the oil from the IOCs, but it should be priority number one to get crude to him, even before the NNPC. It's a newer plant, so he can do more a crude oil barrel than the older NNPC refineries. So if you give a barrel to Dangote, you will get more money than if you give a barrel to NNPC. So we should think that way. If possible, take the entire NNPC stock, close down those old refineries, and just focus on Dangote refineries. Let's leave the talk about monopoly for now. It's too big to fail. It's already built. Let's get it working. Nigeria will benefit from it.
Right. And talking about, the refinery, we see the market route hit the oil market too. And I'm wondering if the $70 level will hold for Brent and WTI. We know, prices coming down. That's a negative for revenue, for the government. But I think that's good for, the Dangote refinery because they do import US WTI.
I mean, it's coming down. It's been on a downtrend. If not for the Russians and the Saudi pact to keep supply lower, oil would have crashed a bit long time and gone to levels below what we have right now. So it's being kept up by supply cuts. Now, with the recession fears coming into America, oil prices should go lower. What might keep it up is the tensions in the Middle East with the Iranians and the Israelis. Something might blow up. I say, okay, maybe Saudi gets involved and all that kind of stuff. But the trajectory for crude oil is going to be softer. That's where we are right now. So we have to keep that in mind that demand is already low. OPEC had to cut to keep prices this high. And now with the US recession coming up, as projected, oil consumption is going to fall even lower. So that's a key red flag for Nigerian budget going forward.
And what do you think the Nigerian government should do with this information, at this time, knowing that we should, get some feedstock to our local refineries, but at the same time, we're seeing oil prices trending downward?
I think we just have to get more austerity focus, right? We can't really spend. The revenues are going to reduce. We can only tax so much. Again, with the protests you're seeing going on, most of the tax increase are going to be sort of calmed down and say, okay, let's maybe start it next year. So the point is the government has got to start to look at austerity measures. Where can we cut spending? Because spending is so income is going to basically falter in the next, say, 90 to maybe a year's time. So we have to start to cut down on the spending and focus on only those productive sectors, health, human services sectors that are going to create revenues. The stuff that are good to have, but not necessary, start to cut them out. Start to get the budget ready and the economy ready for an austerity. If it doesn't come, that's fine. But if it does come, you've got to be ready for it. You can't tax your way out into prosperity. We've got to get FDIs. We've got to get remittances. The economy has got to grow first before we then tax. And since oil generates that revenue to make the economy grow, we've got to say, listen, if this is not going to happen as we've planned, let's cut down the spending today.
Yeah, well said. Let the economy grow before you tax it. Thank you so much. Always great having your perspective, Kalu Aja. Thank you.
Thank you, Larry. Have a good one.
You too. All right, so we'll take a break now. When we come back, we're going to head straight to the markets. Let's see how the markets are looking. Is it looking any better at this point? We'll find out. That's in a moment. Just stay with us. Naira, 51% discount from the current market price of about 82,000 naira. However, there's evidence that price control does not work, and there's risk people are buying to sell at a higher price. Well, joining us now, we have Tomiwa Jawale, is an analyst with FDC. Great to have you, Tomiwa. So how do you think this will play out?
Yeah, thank you for having me, Ladi. With this new policy, there are two sides at which we can look at it. On one end, the government is making efforts, to improve the food security in the country, insecurity in the country, which is commendable. But looking at it realistically, how many people are actually going to be able to benefit from this? And again, when the 40K bag of rice finish, what next then? So, while in the short term it's good for alleviating the food insecurity, it's time to start looking at the long-term strategies. And again, Nigerians are very opportunistic people. If I'm able to buy at 40,000 naira now, there's incentive for me to hold and just sell later when the price goes up. So, that can also mitigate the expected effect, expected relief on consumers. So, what the government needs to start doing now is look at long-term strategies. The policies that we want to see are how many new tractors are coming into the country. What are the policies that are helping farmers to improve their modern farming practices? What partnership are we doing with international private organizations to boost our agricultural extension services? These are the policies we want to see, the ones that are going to help with increasing our yield per hectare of rice. Those are the policies that will boost food rice production in the long run and help to bring down prices. So while in the short term, this could help. This could have some effect in improving the food insecurity in the country. It's not going to go a long way.
Nigerians won't go and resell this rice. Some will just, use it, and you don't have to make a profit, on this one. But, given the 150-day duty-free import period, for rice and the Naira's recent 5% depreciation to 1,605, we've also seen CBN's reintroduction of retail Dutch auction system. What will be the impact on local rice prices with all of this?
Yeah, so the removal of the import duty ideally should bring down food prices. That's about 15% of the price. But again, with imported commodities, you always have to do with the exchange rate. And if the naira is sliding, since July, it has lost about 5% to currently around 1,600. So if you have the naira depreciating, that's going to raise the import cost, and obviously that's going to affect the expected ease in the fall of imported commodities. But with what this retail Dutch auction system is going to do is that it's going to improve the transparency in the market. Now demand and supply will really be able to determine the price. And again, the dollar, the Forex is going to go more to those who really need it. So that could help to curb demand. And again, if there's increased transparency, that's going to boost investor confidence in the country. That could lead to more Forex inflow, which is going to help to stabilize the naira. So we're hopeful that the Dutch system, if done well, will be able to achieve this. We want to see the naira stable. If the naira is stable and hopefully appreciates, that can help with bringing down the prices of these imported commodities. And then when these prices come down, we begin to see prices of food, prices of rice, I think beans, maize, wheat, those are the commodities, we begin to see them fall, which is going to be helpful for the country.
Well, I can't wait for a time where I see, lower prices in Nigeria, lower and stable prices. That would be incredible. But why are there concerns that the import duty-free policy might, negatively impact Nigeria's local rice production? We're not really meeting that demand, locally.
Yeah, so our production only accounts for about 57% of our demand, and there are some concerns that when you begin to import, that could affect the local production. But what we need local production to do first of all is to remember that these imports duty is just for a temporary period of time. Ideally, if there's increased imports, if there's increased supply, that could bring down prices, which could affect the profit margins of the local producers. But again, the import window is temporary, and again, we need to actually focus on boosting production instead. And not to worry about import, because ideally, if the imports come, imports are usually more expensive, but when the imports come down, they actually have to bring down the prices of the local products. So what they need to draw attention to more is increase the investment in the local production, so as to boost the production. So instead of talking about how it will affect increased production, what they need to do instead is to engage stakeholders and engage the government about the efforts that will actually boost production. If production is well and we're meeting our demand, nobody's going to talk about importing rice.
All right, thank you so much. I will keep tracking that market and see how all of this impacts rice prices. Thank you so much, Tomiwa.
Thank you.
All right, so we see other markets, global markets rebounding at this time. Let's get a check of what's happening with crypto. Let's see if Bitcoin is following what we're seeing. And if you look at the screen, it's green on the screen, showing that Bitcoin is actually following with a rebound and most of the altcoins. So it's deeper green. Yesterday was deep red. Deeper shades of red, but today we're seeing deep green. So that rebound is also hitting, the crypto market. Let's look at some of the headlines. Today we see the market was hit by about 1.08 billion liquidation. That's $1 billion. So definitely when you see market tumbles like this, you know that some people were betting that the market will go up, that the price will go up. That's Bitcoin. So those that were betting it will go up, they get liquidated and they lose most of their funds with that. Then we see Trump, former President Trump, warning against selling U.S. Bitcoin holdings. We did see the U.S. government there move some Bitcoin, the market. So expectations that those Bitcoins might actually, get into the market and be sold. So he's warning. He's become the big Bitcoin believer right now. That's former President Donald Trump. All right, let's get a check on what's happening with the market. We have Emmanuel Anyas is a crypto influencer joining me via Zoom. Great to have you on the show.
Yeah, good afternoon, Ladi. Good to be here.
Yeah, so I guess we're moving from a meltdown to some kind of rise at this point. I'm trying to relate it to ice cream, but the market is looking good today.
Yeah, it's expected actually. What actually happened last week that the market went down, we all saw what happened in the stock, in the US stock and in Japan, causing the crash. And you also understand that Bitcoin market or the crypto market always reacts to financial market at that particular time. But after some time, it separates itself from the whole rumble and jungle in the global financial sector. So I was actually expecting Bitcoin to be actually bullish if, with the way the financial market, people are selling out the stock and the stocks are down. But today, we've seen some recovery from stocks, but Bitcoin has started its recovery since yesterday. So we should be able to see a new high for Bitcoin.
Right, but I guess the $1 million question now, we're seeing this rebound from, the global markets into crypto, but could this be a dead cat bounce, or do you think this is actually sustainable?
I think Bitcoin is a safe haven for people who are actually selling their stock. So where are they going to move their money to? Are they going to move their money to the banks, or they are going to move it to another stocks? No, I don't think so. So Bitcoin are good, actually a good hedge. Crypto and gold actually good edge for physical dollar. This is what they actually meant for. And if you see people selling out some of their stocks, like we see Warren Buffett and others selling out their stocks, so you'll be expecting where are they going to move their funds to? We saw BlackRock actually bought like 8 million worth of a token, a reward asset. We saw another big firm actually buying over something $20 million worth of Ethereum. So we see these people, they will actually look for where are they going to move their money to. Since they said the stock market is actually overbought, which is actually very, very true, because we've seen the chart in the stock market, because it just keeps going up. But these guys, these big players, it's time for them to take out some of the profit. But where are they going to move it to? If the analysis has shown that the stock market is actually going to retrace a bit. So I think crypto is a good edge. Gold is a good edge. We should see crypto actually going out. It is not like a dead cat bounce. Bitcoin have not been able to perform very, very well, even with the multiple ETFs and the liquidity flowing in. So we should see more players actually coming in, bringing some of this the money they sold. There are some of these the profits they made in the stock. Coming to invest in cryptocurrency, especially Bitcoin and Ethereum.
All right. So, Emmanuel, very quickly before I let you go, we've been seeing all the tap, projects at this time. We see people tapping, and hoping they're going to make something at some point. Are you still seeing opportunity with tap to earn?
No, I actually gave up with Tap Swap, with the way the team were actually behaving at that was 2 months ago. The Notcoin actually came. I was actually the first pusher of Notcoin, and I introduced so many people into Notcoin. And as God will have it, Notcoin actually did where it printed for people. So other people, other projects just saw their avenue of actually, okay, this startup could be a very easy marketing, less spending, and we can get more people, and which they did. But what I started seeing is that many of these projects started using many of the members to actually make money from themselves and also boost themselves. You see some of them say, okay, go and join my YouTube channel and be watching my video, and they will be earning in YouTube, be earning on Telegram, be earning on Twitter. So they are just using people, and they keep shifting the goalposts. They keep shifting the goalposts, bringing in multiple things.
Right.
We didn't see that in Notcoin. So it will be very difficult for another project to actually come and replace Notcoin. For me, I've given up. I've said it many times that there will be no second best. Notcoin is it.
All right, so Emmanuel has given up on the tap at this point, on the tap to earn. Thank you so much, Emmanuel Maniasi, crypto influencer. Thank you. All right, that's the show today. Thank you so much for watching. Remember, you can flip over to YouTube. You can watch this again. You can watch all our other productions. I'm Ladi Williams from me and the team right here at Channels HQ. It's bye for now.